Oh my gosh. Crypto being down 30% intraday is a pretty big deal. Now, Bitcoin, the largest crypto, has had 756% or more falls. So volatility is not something new for crypto, but something's happening a little differently right now in crypto. And look, even if you don't own any Bitcoin or Ethereum or whatever the other altcoins are, this matters to your investing and even trading because this is about human behavior. So I want to talk about that. And I also want to talk about this other thing, this shiny thing that is shining again and why it matters and why it might actually hurt crypto. So stick around and we're going to talk about that and so much more. All right, guys. So what I want to do is I want to talk about three things with you. I want to talk about crypto. I want to talk about gold, and I want to talk about the Nasdaq 100. Now, I believe they are all having it's all the same thing, but it's happening through different channels. And this is why it's so important to understand how to read price. Really, it's about understanding price direction, understanding where the strength is, and knowing what those signals are. It's only three things, not 300 things or 333 things. So I'm going to jump over to the price charts, and we're going to start with crypto because there's a lot going over there. So if you look at the screen here, this is Bitcoin. It's the largest cryptocurrency out there. And by itself, obviously you can see, your brain can probably see that, or at least mine can see that 50,000 was a very important point. Now let's point out why this matters, whether you own crypto or not. So when I train people, whether it's for investing or trading, but one of the things I start to train people to do when they look at prices to understand where the resistance areas are. So for Bitcoin, 50,000 is really important. It's very likely that a lot of people bought Bitcoin at 50 or above 50,000. And now that it's below 50,000, there's going to be a lot of what's called, in a technical speak, overhead supply, meaning there are going to be a lot of people who are going to supply their Bitcoins when it gets back to 50. And we see this all over the stock market. I talk about price resistance often in these videos, but here's a good example because it's happening right now. Now, this is not the death knell of Bitcoin. The only thing that can really hurt Bitcoin or crypto is if people stop talking about it. And no one's going to stop talking about crypto for quite some time. But we have Bitcoin below 50. If you fancy yourself a Bitcoin trader, just know that that $50,000 mark is going to be one of those places where sellers are going to come in, or again, where people are going to supply their coins to get out because they're like, I don't want any more of this. And this is human behavior, right? Reading price is reading and understanding human behavior. And for 2 decades, literally people come into my world and say, I'm stuck at the 4 to 5% a year. And then they get up to the 10% or 15% a year. And it has nothing to do with IQ. It has a lot to do and almost everything to do with understanding price direction, understanding where the strength is, okay, and understanding what those signals are. So this is Bitcoin. Now, what I want to do is pop over and point something out. So right there, you saw Bitcoin peak. Okay, well, check this out. Coinbase, which is an exchange for cryptos, IPO'd on that day, and it opened up at $380. Now, the Coinbase was called, the Coinbase IPO was called a direct listing. So people just, anyone who had shares of Coinbase before it was public, they could offer their shares to the market. It's called direct listing. And so this stock opened at $381. And since the opening, that opening was on April 14th, it's been falling ever since. And today, Coinbase is down 39%. So that's known as a failed IPO. I'm using IPO even though it wasn't an initial public offering. It was a direct listing, but no one knows what a direct listing is. So when it went public, it is now down 39%. As low, let's just see how as low as it's gone. It's gone 45%. Now I'm showing you equity. I'm calling them equity crypto. So there's ways to play in the crypto world, but not owning the coins, but owning companies that participate in the crypto world. Coinbase is one, and even still at the size today being down 40%, it's still a $45 billion market cap company. So That's pretty big. Let's just look for reference what Goldman Sachs is. That's GM. Okay, I have to literally look up Goldman Sachs because I never type this in. And there it is right there. I knew I was close. Goldman Sachs, in reference, is 123 billion. So Coinbase is a little bigger than a third the size, and it's a brand new company. So other things that are going on, and this is important because equity crypto led crypto higher, and it's leading crypto lower. So let me just show you a couple other crypto plays. Marathon is a crypto play. Super small, but let's just look how it's down 65%. A 40 to 50% correction in a stock that's up 10, 20, 30x in a year, and this was up way more than that, is typical. But when something was up 140 times, but when something starts closing below that 50%, something different is going on. And now Marathon is down, let's just see here, 65%. And man, this thing can really break lower. And it's not just Marathon. Here's Riot right here. Oops, I mistyped that. Here's Riot. Similar size, and Riot is down 70%. So what we have is these equity cryptos leading the market down, and probably MicroStrategy is probably the best one. This really cracked the floor when it broke below about $600, and this is just absolutely falling. Look, these things can fall really far. They've moved far. This is 64%. Here's the thing about MicroStrategy. It was only up 12 times, where Riot and Marathon were up 100x plus. So we're seeing the equity cryptos fall too. As far as where a bottom is, it's either going to come in through a ratio. Let's just pull up BTC. Again, here's Bitcoin. So some logical places. It could find support again down here. Now, intraday, it fell down to this part. So Bitcoin wants to check the $30,000 price out again. If I show you this in just looking at, let's put up Bitcoin here. If you look at the intraday moves, these are candlesticks. You can see that Bitcoin came down here and touched this 30,000, and buyers came in at $30,000. So this is what we know about Bitcoin. And again, even if you don't want to trade crypto or crypto equities, this matters because it helps you understand human psychology. What we know right now is buyers are coming in at 30 and sellers are coming in at 50. So we now have a very well-defined trading range. Whether you're an investor or a trader, understanding these things can only help you become a better person with your money. And we get to watch crypto play this out. So it's very likely crypto comes down at 30. If you're a trader, put a buy order in at 30, and you could easily see the money, pop up to 40 in a day or two, and you could get a quick 30% gain. It could even pop up to 50,000, and you have a 60% gain. So that's the difference between trading and investing. You look for, it's one of the differences. Okay, so that is weakened because it has broken below that, right? It failed above 50. And that is a very clear failure above 50. Again, this could be with energy, this could be with tech, this could be with almost anything. But because it's crypto, it is gonna happen in a accelerated pace. Okay, I want to talk about gold, and I want to talk about the Nasdaq 100. So gold has been quite ugly for some time. And let's just look at gold. We're going to start with gold itself. If it's above 1,800, you either have to be neutral on it or long. 1,800 is the go, no go, right? So now we're leaving crypto, and now we're moving over. Actually, let me not do 20 years. That's too far. And now we're moving over. So this is what we also know, because now we're talking about support resistance, which is really what this conversation, this weekly video is. Look at this. Gold above 1,800. You know a lot of people bought gold above 1,800 because that is a huge support resistance. So gold above 1,800 is long. Now, This has been very messy. It hit 21, almost 2100, came back below that, but gold is above that again. And how many people this week have told you to sell your Bitcoin and buy gold? No one has told you to do that, but that's what's going on right now. Gold is going up, gold is strengthening, and we can kind of verify this by looking at a precious metal mining ETF, GDX. And GDX was probably one of, if not the best subsectors to be in after the COVID crash. It exploded higher about 150% in less than 90 days. The problem is sellers came in, but it stayed above the support, and now it's waking up or woken up again, and it's looking to, I believe it's going to come up here and test this $44 again and see what's going on up here. Are there sellers up there? Is there supply up there? Or is there demand up there? And I think a lot of it has to actually do with Bitcoin. Here's Bitcoin right here, BTC divided by gold. So now we're pricing Bitcoin in gold, and you can see that huge sell-off. So what you're looking at here on this price chart, and this is way too much information. We got to zoom in a little bit here. What you're seeing here is Bitcoin priced not in US dollars, but it priced in ounces of gold. And I don't know if you can see that, but there was a huge collapse right there in Bitcoin. So literally you can price Bitcoin. Like at one point, Bitcoin was worth 36 ounces of gold. And there's a lot of support around the 30 ounces of gold. But now all you need to do is come up with 20 ounces of gold to buy Bitcoin. That's a really short period of time to have to pay 36 and now only having to pay 20 ounces of gold. It's very likely, and I want to look at this intraday too, just to see if we had the same thing. And let's just look at this. And then after this, I want to go look at the Nasdaq 100. So look at this here. Same thing happened. Bitcoin priced in gold. It came down to 16 ounces. So you were able to only take 16 ounces of gold to buy Bitcoin. So we know there's demand coming in there. And just like with US dollars, man, when Bitcoin dropped below 30, meaning it only took 30 ounces of gold, it has really fallen. And so we like to look at different pairings or different pricings or price symbols in different currencies to see if it's happening across the board. And Bitcoin has weakened against the US dollar. It's weakened against gold. And just for good measure, SPY, let's just see what Bitcoin has done. Same thing. We're getting the same support resistance across the board. This is January of this year, and you can see there was a lot of buying. So Bitcoin has weakened against gold, against the S&P 500, and against the US dollar. So that's confirming that it's definitely in a weakening. And again, even if you never own Bitcoin, it actually doesn't matter because we can learn how to understand human behavior by looking at support and resistance. We see that with GDX right now. And then lastly, for the metals, almost lastly, you still have silver. Now this is SLV. So really SLV has just been getting sold off every time it's hit that $27. And so until the buyers come in, there's a lot of supply at 27 for SLV. I can show you silver and it's the same thing. Let's just look at silver and then we'll move over to the Nasdaq. So a lot of supply is coming in as soon as silver. Now this is the actual price chart of silver. When it breaks above, let's call it, you can either call it 28 or 29, people supply the market with silver and it drops. Silver has not collapsed, okay? It is just in a $7 range, right? Between 23, I guess $6, 23 and $29. So you can learn a lot about this because if you're an investor, you can learn where the strength is. There's only 3 things you need to master: understand price direction, understand where the strength is, and understand where the signal is to tell you to get in or out, whether it's getting into a sector or actually getting out of the entire market. Okay, one last thing I want to look at, then we will hit the pause button, is the Nasdaq 100. And that is way too zoomed out. So let's go here. Okay, so when I look at this, just on an absolute basis, it looks great. There's nothing really to see here. You can kind of see right here that every time the Nasdaq 100, I'm just going to call it the Qs, gets above 335, it's having a problem. So we know that supply is coming in when the Qs get to 335. What's going on is the Qs are bouncing between 335 and 300. Let's just call it a 10% range. So that's what's going on with the Qs right now on an absolute basis. So this is also in a trading range, like Bitcoin is now in a trading range. So we have that going on with the Nasdaq. Now, interesting things happen when you take the Nasdaq and you price it in a different currency. Let's just price it in spiders, S&P 500 units. You'll see here that it's actually already weakened, right? This is a much different looking price chart. Now you can see the weakness. And when you want to be a better investor, when you want to take your 4% a year portfolio to 8% or 12%. It's learning where the strength is. It's learning how to understand the signals. There's not many signals. And most importantly, how to read price. And so what we have is the Nasdaq 100 or the Qs being priced in the S&P 500. And you can see the weakness. And you can go through and you can see like kind of across the board, if you take the Nasdaq 100 and you price it in energy, that was its major kind of support resistance. The Nasdaq could not stay above about 8 XLE units. Let's just see what else. Let's say if we take energy. If we take energy, kind of similar with energy here. Industrials, it broke below. So the Nasdaq is weakening against a lot of different things. Let's see what commodities, the whole commodity complex. It looks really drastic when you price the Nasdaq 100 in commodities. I mean, that looks really drastic. That actually looks like a very significant top relative to the commodity complex. And I've been talking for a while how commodities have finally woken back up. Okay, so let's talk about what we learned here. So I started talking about crypto. And even if you don't own crypto, it actually doesn't matter because what this is about is human behavior, market behavior. And the neat thing about crypto is we can learn much faster. We can accelerate our learning because crypto just moves so fast. It's to learn where those support and resistance lines are. It's super important to understand where those are, what the signals to get in or out, how to read the prices. So we see it with crypto. We see it with gold going on right now. Gold is strengthening against a lot of things right now. And not many people are talking about gold. Everything's Bitcoin or inflation. But in fact, gold has strengthened. And I like that no one's really talking about it. If silver can break and stay above $29 an ounce, that is a very, very big deal. I want to say one more thing. Let me pop over. I wanted to show you this. Newmont Mining, which I believe is the largest precious metal mining company based on market cap in the world, just hit a new lifetime high. So there are already precious metal mining shares that are breaking out, right? And this is significant because this is not a teeny startup, right? This is a company on a relative size to all the other precious metals. It's gigantic. It's $60 billion in size, and it's broken up and out. You can see that on the price chart. So this is already happening across the board. And I've actually been talking about it with my little trading community of where the strength is, where the money's coming in, where the demand's coming in. And then lastly, we talked about the Nasdaq. It's in a trading range, expected trading back and forth. It has weakened against a bunch of old world parts of the market. And that, I think, is looking more and more as a secular trend than maybe a secular longer term. Thanks, guys, for being in my world. Please hit the like button, leave a comment. They make a difference, and I appreciate when you do that. Also, too, if you like this video, you're going to love my free course called Clarity and Control. 2 things I've heard from people over the last 2 decades. I've been training and working with people with their investing to take back control of it my entire adult life. And the things I hear over and over is, I want control back over my money. I want control back over my money, and I want the clarity. I want the clarity of who to follow, who to understand, what's right and what's not. It's 2 things, clarity and control. It's a free course. You can check it out in the description. Thanks, guys, for being in my world, and I will see you on the next video. Okay, bye.